What's up everyone, and welcome back to Explain the Charts. Today is October 1st, 2025, and we are doing a deep dive into one of the market's most talked about stocks right now, Microsoft, ticker symbol Microsoft. There has been a flurry of major news, and we're going to break down what it means and then connect it directly to what we're seeing on the charts. First, let's talk about the headlines, because the sentiment has shifted dramatically in just the last week. The biggest news is from Morgan Stanley, which has reiterated Microsoft as a top pick in the software sector, raising their price target from $582 to an ambitious $625 per share. They're citing immense confidence in Microsoft's AI momentum, the growth of their Azure cloud platform, and what they call an underappreciated durability of its business. Analysts there believe market fears about the OpenAI partnership and Azure's growth are largely unfounded, suggesting the stock is currently underpriced. This comes on the heels of other reports highlighting Microsoft's strategic push into designing its own AI chips for self-reliance and launching new premium AI subscription services to compete directly with ChatGPT. It's fascinating because just over a week ago, on September 22nd, headlines were calling Microsoft the most unloved big tech stock, noting its recent underperformance. This rapid shift from unloved to a top pick with a $625 target shows just how fast the narrative can change on Wall Street, and it seems to be driven almost entirely by confidence in their AI strategy. Now, let's see how this powerful bullish narrative lines up with the price action on our daily chart. Looking at the long-term picture on the daily chart, it's been a volatile but ultimately upward trending year for Microsoft. We saw a powerful rally from the 52-week low of about $345 back in early April, culminating in an all-time high of $555.45 at the end of July. That high was hit on a massive gap up with huge volume, which was immediately followed by a sharp sell-off, suggesting a possible exhaustion point. Following that peak, the stock entered a corrective phase, pulling back throughout August and finding a significant bottom in early September right around the $495 level. This $495 area has now established itself as a very important level of support to watch. After consolidating, we began to see a recovery, and if we zoom in on the last week of September, the impact of the news becomes crystal clear. The Morgan Stanley upgrade came out around September 26th, and you can see the price immediately responded, jumping from around $507 to over $511 and continuing that momentum into the end of the month, closing yesterday, September 30th, at $517.95. This is a textbook case of a major news catalyst breaking a stock out of a consolidation range. Let's switch to the 1-hour chart to get a closer look at this recent uptrend. Here we can clearly see a pattern of higher highs and higher lows since September 26th, which is a classic definition of a short-term bullish trend. The price has been climbing steadily, using previous points of resistance as new support. Right now, the key short-term resistance is the high from yesterday around $518.16. The immediate support level on this time frame sits around the $510 to $512 area, where the price consolidated before its most recent push higher. As long as the price remains above this $510 level, the short-term bullish structure remains intact. Now, let's drill down to the 15-minute chart to look at the intraday action. While our candle data ends yesterday, we know from market data today that the stock opened around $514, dipped to $511, but has since rallied to a high of $519.87. This is significant because it shows buyers are stepping in on dips and are actively trying to break through that key resistance area we identified around $518 to $519. A sustained break and close above $520 today would be a very strong bullish signal for the coming days. So, let's go back to the daily chart and put it all together into a bullish and bearish case. The bullish case is extremely compelling right now. You have a powerful fundamental story driven by AI, backed by a major analyst upgrade with a $625 price target. Technically, the stock appears to have completed a healthy correction from its all-time high and is now breaking out on high conviction. If bulls can decisively clear the $520 resistance zone, the next logical target is the consolidation area from early August around $530 to $535. Beyond that, a retest of the $555 all-time high is certainly on the table. Now, for the bearish case, you always have to consider the other side. The primary risk is that this breakout above $518 fails. If the price gets rejected hard from the $520 level, it could form a bull trap, especially if the broader market gets spooked by any negative economic news. A breakback below the $510 support level would be the first warning sign for bulls. If that level gives way, a move back down to test the major support at $495 becomes much more likely. However, at this moment, the momentum and news flow heavily favor the bulls. To recap, let's lay out the most critical price levels and potential scenarios. Your key overhead resistance levels are, in order, the immediate zone of $519 to $520, then the $535 area, and finally the all-time high at $555.45. To the downside, your support levels are immediate support around $510, followed by the more significant support at the September low of $495. So, what's most likely to happen? Scenario 1, which I'd give a 65% probability, is the bullish continuation. We see a decisive break and hold above $520, fueled by the positive sentiment. This would open the door for a move to $535 in the short term. Scenario 2, with a 25% probability, is a period of consolidation. The stock could chop around between $505 and $520 as the market digests the recent move. And Scenario 3, the bearish reversal, I see as a low 10% probability right now. This would involve a strong rejection at $520 and a break below $510, and its likelihood would increase with any unexpected negative news or broad market sell-off. Keep an eye out for Microsoft's upcoming earnings and their Ignite conference in November, as these were highlighted as potential future catalysts that could provide more details on AI monetization and drive the next leg of the move. That's our breakdown of Microsoft for today. It's a fascinating setup where the news and the charts are aligning for a potentially explosive move. If you found this analysis helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Microsoft in the comments below. Thanks for watching and trade safe.